Let's get over to Sydney. Andrew Pease is there. He's Chief Investment Strategist for Asia Pacific at the Russell Investment Group. Well, when things are looking cheap, they're cheap for a reason, aren't they, Andrew?
Well, that's the problem. I think everything is being pretty much overshadowed by what's happening in Europe right now, and it's very hard to have an independent view of strategy in any part of the world without first thinking about how Europe's going to play out.
But isn't it a bit like trying to catch a falling knife here as well? We can see further downside.
Well, that's right, and I think in terms of those comments earlier about Asia, whilst the valuations do look relatively attractive, Asia's a high beta market, and I think whilst we're heading into a significant and potentially protracted risk-off period with certainly a lot of event risk out there, you'd probably be wanting to keep your powder dry on any Asian exposure at this point in time.
Right, well, it's not just Europe, is it? I mean, the US isn't exactly looking healthy. Growth there, pretty weak. Do you anticipate it getting worse and, well, ending up and talking about the R word?
No, I think that's probably a bit overdone. If you can put Europe to one side, and certainly if we do get a significant blow-up in Europe, then that could have other consequences, but that to one side, our view on the US for the last couple of years has been malaise, and really when you've had these cycles when people have been optimistic about growth or too pessimistic, both have been wrong. The mid-path is, and we think the US can get back to say 2–2.5% GDP growth through the first half of next year. Not fantastic by any stretch and not enough to bring down unemployment, but I think that the recession fears are probably a little bit overdone right now.
Yeah, when we look at what's happening there as well, you know, and China, of course, it's trying to become less reliant on exports. That's going to hurt its economy even as we do see this slowdown take place. So when you are investing in China, what do you look at exactly here, Andrew?
Well, the valuations are pretty good in China right now, and probably of all the markets across Asia ex-Japan, China is the standout on valuation grounds. Now, China's a financials-heavy market, and the dominant concern has been the non-performing loan exposure of a lot of the banks, and that uncertainty has certainly kept investors on the sideline. What we're starting to see now is, particularly at the value end of the spectrum, some value-focused managers are starting to come back into that market. So I think that when we do see the dust settle on Europe, and I think China, at least short term, I think the macro is okay. Longer term, there are certainly concerns, but short term, so when the dust settles on Europe, I think China is the market which has the potential for some pretty reasonable upside, I think.
Yeah, I mean, one of those longer-term issues has got to be continue to invest and fixed investments. You know, the rate that they have is incredible. I mean, is that actually sustainable? And when that starts to come down, what happens?
Yeah, it does look a bit concerning, doesn't it? And it looks very unbalanced, and you have this underlying concern going on that it's state-owned banks lending to state-owned enterprises at very subsidised interest rates, which is something we've seen before in other countries, and it's never had a particularly happy ending. But opposing that is, we know there's a lot of infrastructure spend on right now. We've got this social housing program which is building 35 million dwellings by 2015. We know we have the leadership change next year, so we know there's plenty of incentive and plenty of momentum out there in the growth story right now. So I think it's probably a next issue to think about with China, maybe in 3 or 4 years' time, how on earth they're going to achieve that transition away from this massive reliance on investment and become a much more consumption-driven economy.
Very quickly as well, I noticed you like India as well. We had another rate hike there. I think it's the 12th one in a year and a half. Yeah. Doesn't the investment horizon there look a bit clouded given the inflationary pressures?
Well, it is, and it's certainly a much more old-fashioned problem, isn't it, to be worried about inflation and capacity pressures. But India's having a very strong export performance right now. But in particular, when you look at markets, particularly like China and India, in amongst the whole Asian set, they're the more defensive markets. China and India are the less export-reliant markets, and as we saw through the global financial crisis, these were the markets that outperformed the rest of the region when there was uncertainty about global growth outcomes.
Andrew, thanks a lot for that. Andrew Pease there joining us from Sydney. He's from Russell Investment Group.